Assalamu alaikum wa rahmatullahi wa barakatuh. Alhamdulillahi Rabbil Alameen wa salatu wa salamu ala nabi al-amin wa ala alihi wa sahbihi ajma'in. Rabbi shrah li sadri wa yassir li amri wa hlul uqdatan min lisani yafqahu qawli. Dear brothers and sisters, inshallah, in chapter 6, I'll be talking on uh, the international financial institutions. So, it will give an overview of the global financial system as well as the institutions. As we know that it is very important for the wealth managers when for international investors to be aware of the international regulatory institutions, and these international institutions policies as well as their certain initiatives may have certain impact on the investors. So we need to be aware of these institutions and mostly what are their functions. So today, basically, I'll be talking on International Monetary Fund (IMF) and the World Bank. These are the two sister institutions, and then the Asian Development Bank. It is just similar to the World Bank, but it is for Asia. And then finally, I'll talk about Bank for International Settlements, or BIS. So if we talk about global financial system, or the GFS, is actually the interplay of financial companies, regulators, and institutions operating on a supranational level. So there are multinational companies, financial institutions, and businesses. So that's working at different jurisdictions and different countries. So this global financial system can be divided into regulated entities like international banks and insurance companies. So they are regulated wherever they are operating, and then it can be there are regulators that regulate those international financial institutions. There are supervisors and institutions like the European Central Bank, that is the central bank for the whole of Europe, and then the International Monetary Fund. So that is an organization of almost 200 countries that has an impact on 200, almost nearly 200 countries in the world. So these are the global financial system, and there are regulators, and there are even some associations that maybe we'll be talking about in another session, and there are financial institutions. So these supranational institutions, they work largely on a cross-border basis. Means they work on different countries. They facilitate transactions between countries by acting as intermediaries to domestic financial system. They provide safety and stability to cross-border transactions. So when there is a cross-border transaction, it requires a lot of safety, as well as it is very important to maintain the monetary stability, especially in bilateral payment. And when now all the currencies they are relying, their value are based on supply and demand. So it is very important to make sure the value of the currency as well as the payment system are safe among the countries. And some of these supranational institutions, they not only focusing on the financial stability, rather they also providing advisory services, and even they are giving aids like the World Bank, and they are giving financing, they are giving helping the countries, especially those are affected by war or natural disasters. So these institutions, most of them, they have the similar objective of the financial development and financial stability. However, they may work in a different level, and also they play a different role to fulfill those their objectives. So first look into the International Monetary Fund, or the IMF. So this is the most famous the financial institutions that we need to be aware of. So it is a organization of 190 countries. So this institution is working to foster the global monetary cooperation and to secure financial stability, facilitate international trade, promote high employment and sustainable economic growth, and reduce poverty around the world. So this IMF was created in 1945. So it was the objective was to create monetary stability, cooperation among the countries, especially after the World War II, to develop the countries in the Europe as well as in the Asia, and to have safe system of payment, as well as to promote sustainable development, economic growth and development, and promote employment. So this IMF is governed by and accountable to the 190 countries that make up its near global membership. So this IMF is run by the 190 countries, and also it is accountable to those. So it is not only run by one country, rather it's a collectively by all the countries who are the members. So right now it is 190 countries. So if you look into the history, so this it was established, the proposed during the UN, the United Nations Conference in Bretton Woods in the United States in 1944. So at that time, there are 44 countries at that conference, and they proposed to build a framework for economic cooperation to avoid a repetition of the competitive devaluations that had contributed to Great Depression of 1930s. So in 1930 there was a Great Depression and financial crisis. So all these 40 countries after the World War, the World War II, they got together under the United Nations Conference, and they proposed to have an institution for economic cooperation, and there comes the IMF in 1945. So the primary mission was to ensure the stability of the international monetary system. As you know that from this at this time the Bretton Woods system was collapsed and the fiat currency was established. So it was needed to monitor as well as to ensure that the financial the monetary system is stable. And many countries also need to have advice on to manage their monetary system. So the system of exchange rates and international payments, the bilateral payments between the countries, it should be safe and stable. So that enables countries and their citizens to transact with each other, and even the citizens to transfer money from one country to another. They should have a stable and safe system. So because of this, the IMF was existed. So the governance of IMF is the IMF is governed by an executive board, and that executive board is represented by 190 countries, and even the staffs in the IMF, they are recruited by also the countries from these 190 countries, and it has a managing director and three deputy managing directors. Like if the managing director is from one country, the deputy managers they're from one country, and then the highest power is is actually the board of governors. That actually every board of the governors actually consists of the ministers or the central bank's governors, and then after the board of the governors, it gives the executive power, the power to the executive board. Uh, so it's based on the rule, terms and conditions of how the board of governors they transfer the power to the executive board. So for the governance of the board of the governors, they are the highest decision-making body of the IMF. That consists of the governor, one governor, and one alternate governor for each member country. So this governor is appointed by the member country, and usually the minister of finance or the governor of the central bank, they are the governor. So every country will send their representative, usually their governor, central bank's governor, or the ministry of the minister of finance, and those representative will be the governing council members of the board of the governors, and that board of the governors will give power to the executive board, and that executive board will have some uh, uh, um governors as well as a deputy. It will have some managing directors as well as some deputy managing directors. So these are the board of the governors. They also play very important roles. They meet once a year and they mostly decide on the major policy issues. So the IMF, they have three major functions. One is the surveillance, lending, and capacity building. So surveillance is to monitor and then to of the financial transactions, the performance of the central banks, and the monetary policy, the situation in different countries. And secondly, they also give lending to especially to developing countries that needs fund to develop, and especially the countries that are affected by war and financial calamities. And third is capacity building, so which is giving advisory services as well as expert helping certain countries in terms of providing information and research. So this surveillance is a provide advice to member countries and promotes policies designed to foster economic stability, so reduce vulnerability to economic and financial crisis. So surveillance are done, they do monitoring, they do research, and in order to reduce the vulnerability of to any economic crisis before the crisis happens. It does the monitoring and they look into the living standards and other things. So they will do assessment on these three important things: the global prospects in its world economic outlook. So IMF will always publish periodically the World Economic Outlook, where it will provide the assessment, the performance of different countries, their economic situation. And then also the financial markets in its Global Financial Stability Report. So in this periodic report, it will also publish the financial markets performance and whether there is anything wrong in those markets. They are going so down or they are going up or anything. And finally, they also have the fiscal monitor, which is they will uh, assess the public finance development. So what is the development of the people's finance, the country's overall finance? It as well as undertake efforts to strengthen its capacity to detect vulnerability and risk at any stage and improve transparency and accountability. So IMF will do research in order to protect the member countries before facing any financial crisis or to any kind of financial distress, as well as it improves transparency in the financial system as well as the accountability. So if any country's central bank is doing something wrong, if they are taking some kind of policies which are which can be dangerous or harmful to the economy at the long run. So they will give them warning on that. So after surveillance is lending. So IMF gives lending, and it has, if I'm not mistaken, it's almost it has given $1 trillion loans to different countries, and especially to countries which are facing problems like Greece. As well as like Pakistan. So they are the one who had the highest number of amount of borrowing from the IMF. So it enables countries to build their international reserves, stabilize the countries, and continue paying for imports, and restore conditions for strong economic growth. So while any country is facing problem to pay for their imports to pay for their loans to other countries, so they can borrow from this IMF. And IMF as well as helps to give emergency financial assistance to support a recovery from natural disasters and conflicts. Like in some cases, that in concessional interest rates. So some countries like who just come just want to start from war, like Afghanistan or Iraq. So IMF gives them loan with very low interest or without interest. However, IMF does not give loan to specific projects or to private organizations. Third is the capacity building, which is technical assistance and training to help the member countries design and implement economic policies that foster stability and growth. So, in order to have financial stability and growth and development, so the IMF provides research, training, dialogue, conferences, as well as other advisory services to their countries. So it also assists countries to build up their human and institutional capacity, the human capital development as well as the institutional development, and in order to implement the effective macroeconomic and structural policies put in, and also to make reforms. So whatever the policies which are good for the country, financial policies, and how to implement those policies if the country doesn't know, if they don't have manpower, so the IMF will help them with manpower as well as with the research and advisory services. So the capacity development mostly focus on the macroeconomic policies. So what are the policies? And they give research, do research on suitable, and they tell what is the most effective policy for a country. Exchange rate system, financial sector sustainability, tax policy, as well as expenditure management. So as you see, that all these are really helpful to a government, to the Ministry of Finance, in order to take the most effective policy for their country. So how they provide this service? Usually, they sometimes placement of experts. The IMF will send their experts to the country. They will and then they will sit there in offices, and then they will do research, and then they give feedback. As well as IMF will give technical and diagnostic reports, what's the financial reports, what's going on, and what can be the consequences of certain policy. They will do report on that. They will give training, and they do seminar workshops to develop the human capital and to educate the people, as well as online advice and service. So after the IMF, the World Bank is just a sister company of the IMF, but World Bank is focusing more towards the development, mostly the infrastructure development. And as you know, the World Bank has sustainable development goals, so that focusing on renewable energy as well as development or economic growth which are sustainable, which is not harmful to the environment as well as the animals. So this World Bank also was created at the same time like the IMF in 1944 in the Bretton Woods Conference along with the IMF, and they have the headquarters same in the US. So the richer nations of the world contribute through taxes, and many countries borrow extensively from the World Bank. So World Bank as well also help through lending, and mostly so same like IMF and the World Bank. Actually, they are funded by their members, and the richest countries of the world, or the members of the member countries which are the rich, they have highest contribution as well as they have the higher voting power. Like in the World Bank, both in the World Bank and IMF, US is the highest contributor, and at the same time they also have the highest voting power. If not mistaken, it is around 15%, while the other countries like China has only 6%. So it is based on the voting power, is also based on the financial contribution that they make. Uh, as well as they have investment, as and then they get the collect the loans that they give and they finance others. So initially the World Bank was established to help rebuild Europe after the war. So that's the history. The World Bank was focusing to help the war-torn country in Europe after the World War II, like uh, Poland, UK, and other countries, and Germany, all. So they were trying to rebuild. It has remained, and but after that, it has remained a major financial source for reconstruction. Given the frequent occurrences of natural disasters, humanitarian agencies, and post-conflict rehabilitation. As you see, after the development of the Europe, it is still relevant because there are a lot of natural disasters, as well as there is climate change and so many issues, and that needs help from an international organization. So the World Bank Group works with country governments mostly, as well as with the private sector, the civil society organizations, the NGOs, the regional development banks, even the think tanks, the research organizations, and other international institutions. And they're concerned mostly on climate change, conflict, food security, to education, agriculture, finance, and trade. So these are the more important issues that World Bank is concerned. And as I have said, they have their goals, and what their ultimate goal is. As I said, all of these efforts support the bank's group's twin goals of ending extreme poverty by 2030 and boosting shared prosperity of the poorest 40% of the population. So their two goal is the ultimate two goal are to eradicate poverty by 2030 from the world, and secondly, to have a shared prosperity development, to equal access to food, as well as education, to the bottom 40%. Like in Malaysia, we have B40. So here is aim is to get the development of the poorest 40% people of the world. So the World Bank also found, as I said, founded in 1944. The international, and its name was the International Bank for Reconstruction and Development, and then it was named too as World Bank. And is World Bank is actually a group of many organizations, a group of around five. So this the World Bank has expanded to a closely associated group of five development institutions. So there are five institutions under that. So it is a group. So originally, it loans helped rebuild countries devastated by the World War II in Europe. And then in time, gradually, the focus shifted from reconstruction to development. So from the reconstruction of the Europe, it look into the development of infrastructure, and the sustainable development of different countries, the developing countries like development of dams, electrical grids, irrigation system, and roads. Especially the developing countries, they didn't have all this infrastructure. So World Bank was helping those countries to develop the infrastructure. And then in 1956, it got its one of the um, um, uh, one of the subsidiary institution is called International Finance Corporation. So that with that institution, it became able to the lend to private companies and financial institutions in developing countries. So even the different NGOs or different financial projects, they get funding for development. And then in 1960, they had International Development Association. So that put great emphasis on the poorest countries, part of a steady shift from the eradication of poverty become the bank's group's primary goal. So this International Development Association was mandated to look into the eradication of the poverty in the developing countries, especially in Asia and Africa. The subsequent, and then after that, there was another launch, the subsequent launch of the International Center for Settlement of Investment Disputes and the Multilateral Investment Guarantee Agency. So these two agencies are focusing to improve the bilateral trade, business, international business, and cooperation. So these two was mandated to help international business to support the entrepreneurs to give them some kind of guarantee as well as assurance and risk management for them to have international investment. So there are 5 groups under the World Bank Group. The first is the International Bank for Reconstruction and Development, established in 1945. So that's actually gives loan or debt financing to on the basis of sovereign guarantees. So it gives loan to countries. Okay, so it needs to have guarantee from the government, and focuses on lending to middle income and credit or the poor countries. So mostly middle income and the country, poor country, but it has a credit worthiness, so it focuses on that. So not all of them can get their loan. The second is the International Finance Corporation, established in 1956. So that provides various forms of financing without sovereign guarantees. So here it can give loans to the private organizations and even to the poor countries that it doesn't require any guarantee from the government. And then International Development Association was established in 1960, which provides concessional financing. So this focus was to give loan without interest or with very low interest. So actually it focuses on the poorest countries of the world to give them loan for their development without interest or sometimes with very low interest. And these two, Multinational Investment Guarantee Agency as well as International Center for Settlement of Investment Disputes, they are more focusing on investment, international investment. So the first one, Multilateral Investment Guarantee Agency, it was established in 1988, which provides insurance against certain types of risk, including political risk, primarily to private sector. So if this World Bank's, this MIGA, it will give this kind of guarantee to investors, to private companies in order to invest in a new country. And then the second one, International Center for Settlement of Investment Disputes. So it works with the government to reduce investment risk, resolve issues related to investment conflicts. So it also facilitates the development through businesses because it gives, facilitates if there and business, and if there is any disputes and conflicts for the entrepreneurs to or for the corporations to do business, they will solve their problem when discussing with the governments. So as we have said, the ultimate objective is the eradication of the poverty from the world. And other than that, it also have other programs to address the challenges in the partnerships of business and financial partnerships, community participatory and community-based projects that's for development, increase attention to governance and institutional changes. So it has certain development goals or sustainable development goals that focus on eradication of poverty, food for all, and sanitation, as well as using the renewable energy, and then education for all. So there are certain goals under this World Bank that they are focusing on. And so they focus on the results and performance and inventing new approaches to deal with fragile states, such as low income countries under stress. So they try to get innovative solution in order for the low income countries to come out with from the poverty as well as the financial stress. Finally, the Asian Development Bank. So Asian Development Bank is quite similar to the World Bank, but it is Asian. So it is what we can say that uh, the development bank that focusing on Asia. So here is also a multilateral regional development finance institutions, but it aims for an Asia and Pacific free from poverty. So ADB, in partnership with the member governments, independent specialists, and other financial institutions, is focused on delivering projects in developing member countries that can create economic and development impact. So ADB gives financing to poor countries in Asia, as with the again with the objectives of removing poverty, as well as it gives loan to private projects and initiatives to develop infrastructure. So this ADB is located in Manila in Philippines, considering the poverty there. So the headquarter is there. So where 60% of its staff are Asian, okay, and share capital also from Asia. However, even though there are some other countries like US also has contribution in ADB. So ADB will raise a fund through bonds, issuing bonds in was international capital markets, as well as it rely on the member countries' contributions. So every country will contribute, and then they will issue bonds, as well as they also have earnings from the investment. And from the lendings they provide and the repayment of the loans. All its lending and technical assistance are exclusively for Asian developing countries. So ADB is exclusively for Asian. It is quite giving similar service like the World Bank, but it is only for the Asian. It is run by the members of the Asian countries and also focusing on the countries in the Asia. And why ADB was established, as I can see, okay, that there was poverty in the Asian region yeah, during that time and even now. So in its charter also calls on ADB to pay special attention to small vulnerable economies and to encourage regional and sub-regional cooperation. So it focuses on the countries which are vulnerable, which are the poorest in Asia and also in the Pacific. So even some of the islands which are very poor, so they are focused on those countries. In addition to providing loans, technical assistance and grants, they provide, and also in addition to that, provide direct assistance to private enterprises through equity investment. So ADB helps to private enterprises in order to develop business. So through equity partnerships as well as through giving loan. And then it also facilitates dialogues, provide advisory services, and helps through research, as well as giving reports and giving seminars to develop certain sectors as to help the governments. So the ADB was established. It was conceived. Okay, well, it was uh, uh, established. It was discussed that we should have something like the ADB in 1960s as a financial institution that would be Asian in character. So a resolution passed at the first ministerial conference on Asian economic cooperation held by the United Nations Economic Commission for Asia and the Far East is 1963. Set that vision on the way to becoming a reality. So in that, under the United Nations, they discussed that there should be a financial institution focusing on Asia. So the Philippines was the center, was the head HQ for the Asian Development Bank. In 1966, with 31 members right now, uh, that came together to serve a predominantly agricultural region. So at that time, they focusing on agriculture. Even the Japan, also Japan after US, I believe the Japan has the highest share contribution in ADB. And at that time, Japan also focusing on the development of agriculture. So in 1960s, ADB focused much of its assistance on food production and rural development, given the fact that the Asian countries or mostly they had rural villages and they're focusing on agriculture. So ADB was giving loans to especially to farmers or to enterprises that's focusing on food. So right now, ADB has 68 members. From 31 members at its establishment in 1966, ADB right now has 68 members, and most of them from Asia, but there are some other members from outside of Asia, like Australia and US and other countries. So their focus area mostly on infrastructure development like energy, information, and communication technology. So it helps the poor countries or developing countries to have infrastructure like for energy to develop dams. As well as roads and water sanitation and others. It also focuses on environmental protection and development, which is not harming the environment, regional cooperation and integration among the Asian countries like we have ASEAN, SAARC, and other regional cooperation. Finance sector development, so it is helping the financial institutions, the banks, as well as they are helping the education sector to develop. They're giving a loan to develop universities. They are providing scholarships and internships to students. And other than this, they also have focus on health, secondary focus on healthcare development, especially the public health on certain issues, agriculture and natural resources, and public sector management, the transparency in the public institutions, etc. So their key functions are poverty reduction and growth financing activities, extends loan and equity investments, provides technical assistance for the planning and execution of development projects, and maintain a close working relationship with other international monetary organizations. So same like the World Bank, they also focus on the poverty and then give loan or equity investment to enterprises or to governments projects, and also provide technical supports through research to give dialogues and conducting and also helping through expertise. Now, this is a very important institution, and this one is different from the other three. It is called the Bank for International Settlement, or BIS. We can say it is the central bank for all the central banks, to make it simple. And it is the oldest international institution in the world. So it was established before even the World Bank and the IMF. It was 1930, the Bank for International Settlement. So this is the oldest international financial institution and remains the principal center for international central bank cooperation. So it is a place where the central banks of all of different countries around the world, they will cooperate, they will meet, and they will discuss the issues, and also they will take policy. It is head office is in Basel, in Switzerland, and it has representative office in Hong Kong and Mexico, and it has 633 staff from 63 countries. Even though it's 63 countries, but it covers almost more than 90% of the world's economy. Means the major countries are the members. So it is an BIS is an international organization which fosters international monetary and financial cooperation among the central banks. So it is focusing on the cooperation among the central banks. It also provides institutional framework for cooperation in the monetary and financial area, and serves as a meeting place mainly for central banks. It has 63 member central banks representing countries from the world. Even though the 63 members, but it actually covers the major countries, almost more than 90% of the economies. And one of their policies, we can see that like the Basel Committee's capital education requirement. So it is actually supervised under or done under the Bank for International Settlement, under the BIS. So here the central banks all they meet, and then they decide, they set that committee like the Basel Committee, where they put policy for the robust operation of the banking sector around the world. So as well as it's a place to meet for all the governors of the central banks and have a dialogue and discuss. So right now there is COVID issues, so what should be the done, and all these are among the not only for BIS, even the World Bank and other like the Asian Development Banks, all are also having seminars and research on what would be the next, and what is the impact of this COVID-19. So they are conducting research on this. So the function of BIS serves the central banks in their pursuit of monetary and financial stability. So it serves the central bank in terms of discussing the policies, setting the policies in order to make the monetary policy, the financial system is safe in different countries that's monitored by their central banks, fosters international cooperation in those areas, and acts as a bank for central banks. So it is like the central bank of all the central banks. It facilitates dialogue and cooperation among central banks and other authorities that are responsible for promoting financial stability. So it will bring together the central bank as well as other regulatory institutions around the world, even sometime from the IMF, to discuss on the issues of collaboration, as well as some of the issues that needs collaborative discussion. It also conducts research on policy issues conforming central banks and financial supervisory authorities. So it will, in order to make sure the financial system is safe, like during the COVID, so they do research on or for the best performance of the financial sector. It acts as a prime counterparty for central banks in their financial transactions. So when there is a financial transactions through one central bank to other, so they work as a trustee, or sometimes they are the counterparty in order to do the transaction. So the international payment system, the bilateral payment, so all these also is a concern of BIS. It also serve as an agent or trustee in connection with international financial operations. So it's about talks, even also the gold reserve, for example, the currency, as well as how to the banks should be monitored, how the financial operation, the system should be monitored by the central banks. So that's they are giving policy. Setting policies, they are discussing, as well as they are serving an agent when there is international collaboration between the central banks or financial institutions. So this is the functions of BIS, and it has mainly three departments: the monetary and economic department, banking department, and general secretariat. So the monetary and economic department is focusing more on the research, doing the statistics, and then to understand the policy issues, what policy that the central banks need to take. And the second is the banking department that focusing on financial services to support central banks. So in the management of their foreign exchange, gold reserve, and invest the BISS equity. So the banking department mostly serving the central banks, helping them in order to solve the issues related to their gold reserve, as well as the exchange system, even the supply, the monetary policy, and others. And finally, the General Secretariat is focusing more on the organization. It's about the human resource management, the IT development, and other related organizational issues that's taken care of by the General Secretariat. So these are the international institutions that I have talked about. So I've talked about the IMF and the World Bank. So those are the sister international institutions that also developed under that was established after the World War II around 1945, actually to eradicate poverty, as well as to make sure the financial system is safe and it is stable. And they give loans to different developing countries, especially or vulnerable countries, and so as well as they do monitor, do research, and they also do capacity building. And then after that, the Asian Development Bank is giving the almost similar services but focusing on Asia. And finally, the BIS is actually the central bank for all the central banks. So it is mostly serving the central banks, and it's a platform for central banks to have dialogue and to discuss, as well as to do research on the issues related to central banks' concern, like the monetary policy, like capital adequacy for the sustainability of the banking sector. So with that, I thank you. And if you have any question, you can ask me in the um, chats in the comment section. And this is for further reading. Please refer to all their websites to know the updates and more details of what they have been up to. Okay, with that, I thank you. Assalamu alaikum wa rahmatullahi wa barakatuh.